Our trader today is Lee Munson, CIO of Portfolio Wealth Advisors. Lee, it's great to see you. I appreciate it. And let's start with SAP. Now, the CEO is saying that Trump's Stargate project should be a wake-up call for Europe, and he would absolutely support a similar plan overseas. Before we go down that road, though, on their Q4 expectations, Stifel is positive on top-line growth and cloud momentum. TD Cowen thinks they could get margin expansion. The stock has done pretty well over the past year. Up 11%. What's your take here, Lee?
Everything comes down to that for-HANA cloud-based system. What people love about SAP, don't get me wrong, I do not like European stocks. I don't even have the IFA in my core portfolio. But this is a company that does 40% of their business in America, and it's growing. I think that now that they have that for-HANA cloud-based system is mature, you're going to see sales accelerate. You're going to see margin expansion. I think you're going to get beats to the upside all year long. I can't believe I'm saying that about a European name.
But to your point, they have a lot of U.S. exposure. I think they're the biggest company in Germany. So you're placing your bets on a strong one. All right, elsewhere in Europe, LVMH, the shares are actually up 18% so far this year. We've seen a little luxury renaissance. Morgan Stanley recently cited improving prospects that Louis Vuitton and Tiffany. B of A thinks there could be some foreign exchange headwinds, but they're starting to turn into tailwinds, actually. Would you go into this one?
I feel like I keep this company in business. The big problem with European luxury is they were trying to get a younger audience with ridiculous on-trend stuff. Everybody knows that it's older people who buy this expensive stuff, and they're the ones who are buying it for their spoiled little children. But Louis Vuitton, they know how to deal with licensing, the Murakami, boost sales. Tiffany and then Christian Dior, that's classic as well. They don't fall into the Gucci trap of trying to be too on trend. Tiffany's a strong brand. My daughter loves it. It's in every mall in America, yet still retains that brand appeal. I love it. There's just one little thing. When you're doing your calculus and analysis, just make sure that the alcohol segment you have declining over time. Young people just aren't drinking. I still like the stock. I still think that they're the category killer outside of Hermes, period.
Well, we've certainly seen the other beer and spirit stocks down, but they've been managing, diversified enough to buck that. But it's a good point. Moving on to RTX, then the shares are up 8% this month. Citi upgraded them last week. They think positive results, strong European demand, normalization of equipment backlogs, but are waiting to see how the transition of power in Washington plays out. What do you do with this one?
I don't think that's what it's about. I think it's all about spare parts for these airline engines. It's been doing great because we're in a huge cycle that's going to peak this year for selling parts to existing airplane engines. As we go out of 2025, Boeing and Airbus are producing a bunch of new engines. Here's what people don't understand. When Boeing and Airbus sell a new engine, they sell it at a loss. They're selling them new because the money's in the parts. That also squeezes RTX their margins for those new plane parts. If you're a contrarian, you want to edge, you got to believe that there's going to be a huge China resurgence in Asia leisure travel. If so, used parts are going to continue to be strong. Margins are going to continue to expand. The CFO over there does everything right. But you got to believe about Asia leisure, or else this thing could fizzle out.
There's a tie there, Asia leisure with LVMH. I can see a theme emerging. Lee, appreciate it. Lee Munson of Portfolio Wealth Advisors. And that's it for us. Thanks for watching The Exchange, and I'll join Dom Chu, who's in for Brian, on Power Lunch right after this quick break.